Then we're going to go into some Q&A at the very end. We're going to talk about some of your stocks, what's going on with those. So be sure to put those in the chat, and we're going to get going in just a second. All right, Mike, come on in here. How you doing today, sir?
I'm doing great, man. I got a birthday tomorrow, as you pointed out. What'd you say, my 39th birthday or something?
17th, 39th birthday.
Oh, that sounds like I'm old. Yeah, I'm actually 62 tomorrow. If you can, I can't believe it. It's weird, but it happens.
That's
And
awesome.
I'm at my mother's house, so I'm in a bedroom that I stay in when I go to my mom's house. So there you see the closet doors behind me. So I'm not in Costa Rica. I'm in Houston, Texas, my second home.
Oh, very nice. Bring it over here to the States. Is that where the accent's coming from?
Yeah, I'm just putting it on for now. You stay down here for a few days and you start talking like like Texan. And I'm not making fun of Texans. I have half my family's Texans, so I'm actually celebrating the Texas accent. Okay,
Nice. That's a good way to put it. Celebrating it. What we got going on in the markets today?
Well, you mentioned the Fed. We got a little graphic here, but Powell came out yesterday. The Fed came out yesterday and said, well, no rate cuts just yet. The markets are pining for these rate cuts. We want rate cuts. We want rate cuts. Stuff's expensive. We want rate cuts. And he said, finally, for the first time, he's been dovish on rate cuts. And he says rate cuts are on the table if inflation continues to cool, which it has been. So the markets were quite enthusiastic about that. Let me pop into a chart of the S&P 500. Now, I typically use the SPYs, which is an ETF, exchange traded fund, that tracks the S&P 500. These are the 500 biggest market cap stocks in the U.S. And you can see here, well, heck, last week, Ryan, we were talking about, Chicken Little skies falling. And then we drop below the 50-day average. That's the red line. We bounce right off of 540. That's a line in the sand at 540. We got to bounce off that. Yesterday, we got the rate cut or the rate cut announcement for potentially September. Looks really good for that, actually. And we got a bounce. So it looks like the markets are ready to start another bullish leg. A little bit of a pullback corrective move, healthy for markets. And then we're beginning to bounce. And indeed, if you take a look at the futures trade 24/7 from Sunday night to Friday night. And you can see here that post announcement yesterday, the Dow's up, the S&P 500's up 0.44. That's a healthy pre-market expected open, and the NASDAQ as well on the rise. And we can also take a look at some of the other markets because it's even more bullish on the Dow Jones Industrial Average, flirting with all-time highs right there where my pointer is an all-time high close. And we touched it yesterday, although closed beneath this 410 level. So I'm expecting this 410 level to be breached. And after that, further upside on the diamonds or the Dow. And we can take a look at the small caps. We call those the Russell 2000. There it is. IWM is an ETF that tracks the Russell 2000, the smallest 2,000 companies on the U.S. stock market. And similar to the Dow, it is also flirting with all-time highs. Indeed, yesterday, the Russell 2000 was at an all-time high and then fell beneath this very important level of 225. Okay, that is a resistance level. And in snipers, this strategy I use, which I call snipers, is reliant on support and resistance. And I call those lines in the sand to make it more colloquial. So here, 225, we get a close. I think we're going to get a close above this today. A close above 225 would signal bullishness in the small caps. So, Ryan, the markets look decidedly bullish. And you know something else? We are in prime time earnings season. Ryan, let's throw this earnings whispers chart up here that shows the earnings that have happened this week and are about to happen today. So we're going to take a look at Meta today. Meta announced pre-market this morning. We're going to take a look at that earnings announcement. We're also going to take a look at another stock that you may have heard of before. There's been a very famous car company. We're going to talk about them as well. But also take a look. today after the bell, before the bell, Moderna announced there's some opportunity there. Tonight, big earnings on Amazon, Apple, and Intel, and even Coinbase. Those three there after the bell. Those would be good sniper candidates for the morning. All right. Now, I have a community of traders that trade Wednesdays through Fridays in the morning. And if you're in that community, be ready to do something with Amazon and Intel and Apple tomorrow morning. They could very well, probably will gap in one direction or the other.
I'm
All right,
super
so anyway,
interested in seeing Intel because they kind of had a bit of big news. I think it was this past week that they've been sending out some duds for chips that have just been not doing very well. So it'll be interesting to see if that affects it or anything like that. And also, I think there's a new round of AMD chips coming out soon. So that might be interesting to see if that affects Intel at all.
Yeah, good point. Let's take a look at Intel. I got to check this out. Look at Intel here. They've got, let me get rid of this little graphic here. I was playing with Intel recently, and but check Intel out. Intel, you look at Nvidia, it's at all-time highs within excuse me, within a whisper of all-time highs. And Intel for tomorrow, good call, Ryan. You can see here that Intel is in the cellar, right? Other stocks like Nvidia are at all-time highs. I'm looking at this line here, this line in the sand at 30, 30, 30, 30. Support, bounced off support yesterday. So this is excellent for Intel, because if it gaps up on good news, we can sell at 30. If it gaps down on bad news, we can sell at 30 as well, or even a bit higher. So Intel's at a beautiful spot for a snipe in the morning. I love the smell of napalm in the morning. And Intel could be a very good one. And indeed, my community will be looking at that one tomorrow, as will I, actually. All right. Thanks for that, Ryan. Appreciate that. You mentioned American Airlines, Ryan. We placed this last week. Let me go ahead and repaint this. I use tools and rules and tools to manage my trading and tracking my trades. And here you can see a trade we placed on American Airlines that actually got filled for 11 cents. And what we did, we're expecting American Airlines to stay below 11. After a bad earnings announcement, the stock bounced off of support, has made a run towards 11. Yesterday, you can see here, this is 11 there. Yesterday, you can see it touched 11, fell away. All right, so we just need the stock to stay below 11 between now and next week. And if it does, we have a chance to make up to 28% on this particular trade. So this credit spread that we placed last week is in good shape. We're currently up 7%. The rules on these are really simple. Y'all, you want to be buying these spreads back for 10% of the original credit received, and that would be a penny. All right, so that one's looking really nice, Ryan. And we have another one I want to talk about. And you've all heard of this company. And it's actually, you know what, Ryan, I'm sorry, I'm off script here. Let's go to the performance. So, we've had a really good run this year. And typically, this system operates at a 90% win rate with an average profit of 10%, with losers considered, averaged in 10% every 7 days. And what we're doing so far this year, Ryan, is 14.45% every 5 days with a 93% win rate. All right. So a lot of people, when they say, oh, you're making 10% every 7 days, typically they're like, that's not enough money. But look, we're only in the trades for a week. And our current performance is much better than the average that I've gotten over the last couple of years. So just with that average, 10% every 7 days, you could take the same money and trade it 4 weeks. And your monthly return would be 4 times 10%, 40%. So this strategy is about getting on base. I like the Moneyball analogy, the movie Moneyball, where they hired people that just got on base, players that just got on base. They didn't have to hit home runs or even hit, just get on base, get on base, get on base. And that's the strategy. We're not swinging for the fences. We want to grab our high probability profits in a short amount of time and let those stack up. And it's very systematic. That's the best part. And Ryan, we have a guide. We have a guidebook that will walk you through all of these steps, 5 steps. How do you find the right opportunities? How do you construct a line? How do you figure out your lines in the sand, your support resistance levels? What's a credit spread? How do you construct them? And best, how do you manage them once you're in? So grab that guidebook. It'll be down. It's downstairs below my face here. Grab the guidebook, and it's free. Costs no money. Grab it, read it. Be ready to snipe with Ryan and I every Thursday at 9:15 Eastern Time. All right, Ryan, let's go to our first trade on Meta. Meta, Facebook. Now, this is what I call the bifecta. Facebook, Meta is as Facebook's parent company. The tech giant saw shares surge nearly 8% in pre-market trading after the company beat second quarter estimates handily, by the way, and issued better than expected future guidance. So they beat and they raised future guidance. That's what you want. Those trades there offer the best probability when they beat on earnings, raise guidance for the future, or even better, actually, is if they miss on their earnings and lower future guidance. That is the best. That is the best. So, perfect setup on Meta. Let's go to a chart. Let's go right over to Meta. And here's the current stock chart. The stock is due. Let me check the opening price here. Well, actually, we can see it right here in the Hub software. I'm going to take this to a 5-minute bar, and you can see that Meta is due to open up in 2 minutes, right around 475. So where was Meta yesterday? I'll go back to a daily chart here. If you want more information about the Hub software, go to hub.com and you'll learn all about it. All right, so the stock, actually, that's not the opening price. Let me just check in a live simulated environment. So this is the price, 521. Facebook is due to open up at 521. Let's go back to the chart. Excuse me, I've been sick this week too. I apologize for my voice. So the stock's going to open up right about here. All right, it was here yesterday, last night. Now it's up at 521. Good news, raise future guidance, beat earnings, raise future guidance. So now the game is, let's draw a line in the sand where we don't think Facebook is going to make it back down to. And so the best one that I could show you here would be, and you got to get some credit. So I kind of know what credits are available, but if I could get 450, that would be awesome. And so I'm going to try for that. And if I can't get it, then I might lift it up to 475. Okay, so look at 475, resistance, support, support, resistance through here, support there. That would be a good line, and 450 even better. But as you slide 425 would be, 375 would be awesome, but you don't get any credit going that far away. So it's kind of like you got to figure out the sweet spot. I'm going to try for 450, and let's see if we can get anything at 450. So with the markets opening in a minute, I know I'm talking fast, but I want to get this on right at the market open because there's more premium. So the bell just went off. The markets are live. I'm going to go into a simulated environment. And actually, before I do that, let me show you this little spreadsheet. This is what I'm going to try to do here. All right. So on Meta, I'm going to look to sell the August 16 450 put by the August 16 445 put. And I want at least 50 cents. And that 50 cents is the minimum. And that 50 cents is derived. The minimum is derived by taking the distance between the strikes, 5 times 10.10, 10% of 5 is 50 cents. If I can get that, I know I'll have about 11% maximum profit on the trade, and that's about where I want to be. So let's go right into the live simulated Thinkorswim environment. And please know that I'm not recommending Thinkorswim. I'm going to do one contract, and I can see here the August 16, 450, 445 short put spread is only going for 22 cents. All right, what does that mean? Well, I got to move closer. I've got to take the line in the sand closer to the heat in order to make any kind of to get myself to a 10% profit. So I can lift this up a little bit at a time. Let's go to these turning points right there, and there, and there, And that level there is right around 460. Let's go to 460. Let's go 10 points higher and see what we can get there. So what I'm going to do here is, and I'm not seeing enough credit there either. So I'm going to have to go up. See, there's no credit shown at 460 for August 16. So then I have to go up a little bit higher, and I'll just step it up a little bit at a time. 475 is really as close as I want to go on this one. 475 right there. Now, what's good about 475 is that the stock would have to breach and close below 500, which is also a support level, and then the 50, and then we get to 475. Let's see if we can get there. It gives us plenty of protection. Let's go to 475, and I see enough credit. There we go, 475. That's the one we want. I'm going to go ahead and jam it in there. So it's sell the Meta AUG 16, 475, 470 put spread, and the prices are moving around. I want to make it 50. See, if I had to place it, I would have gotten it. Let's go to 50 cents here. Confirm and send. Send. I just got it. Wow. If you're paper trading this live, go ahead and tell Ryan if you got filled on that. I just got 51 cents on that Meta trade. Okay, so let me slow down a little bit and break this down. All right, we got 51 cents by selling the Meta AUG 16 475 470 short put credit spread. It's a credit spread. We sold it. All right, so let me show you how this looks here. So we sold the 475 put. We bought the 470 put, and we got 51 cents. All right, that's our credit. All right, now I did one contract. Let me show you the math here. So we got 51 cents on a 5-point spread. Now, these calculations are really quite simple once you understand them. They are also in the guidebook, which is free. Click below to get your free guidebook. And here's how it breaks down. We want to know what the maximum risk in the trade is. We also want to know what our maximum return on investment is in the trade. All right. So the calculations are very clear. You take the width of the spread, subtract from the width of the spread the credit, and that will give you your maximum risk. All right. So that's here. $5 is the spread width. 51 cents was the credit. What's left over is your risk, and that's $4.49. All right, so that's $4.49 of max risk. If you do one contract, that means that your total credit would be $51, and your total risk would be $4.49, $449. So this is the price per contract, and one option trade, one option spread, one option period controls 100 shares of stock. So to calculate your total credit, you multiply it by 100, and your total risk, multiply that number times 100, and then you get your risk profile. All right, now, what's the maximum return on investment percentage available? Well, you divide your credit by your max risk. So our credit was $51, and our max risk, $4.49. You divide 51 by 449, you get 11%. So that's our maximum return on investment on this trade. Perfect. Now, this if I was to tell you the most important rule in trading, it would be position sizing, managing your risk. This could be a 100% loser if Facebook or Meta tanks for some weird reason, and it'd have to be a weird reason. Then we might lose $4.49. Now, if you put all your eggs in one basket and you back up the truck and you put half your account in the trade and you lose on this trade max, then you've lost half your account. Ain't nobody got time for that. So the limit rule is don't risk any more than 2 to 3% of your total portfolio value on any given trade. And for me, I'm saying that's 500. And so if my max risk is 449, then I can only do one contract, which is why I only did one contract. All right, Ryan, that's a good looking trade there. I'm liking that one a lot. And one last thing before I move on to the next stock that I have for you is exits. Exits. Notice the first exit is loss exit. All right. Another rule of trading, and in my community at Michael Wade Trade Coaching, this is like religion. Manage your risk and let the winners take care of themselves. Really and truly, most humans want the profits. I can make more money if I stay in and the stock bounces. I might get my money back. Normal, but not going to work. You must manage your risk first. Flip the battery in backwards. Look at the risk first, manage it, and let the profits happen as a consequence. So, with that established, what you want to do is if the stock closes less than 475, which is our short put, which corresponds to our line in the sand at 475, make it even easier. If the stock closes less than 475, take it out. Take the trade off. You'll lose some money, but you won't lose unless it drops all the way down to 375. If it breaks reasonably below the 475, you won't lose all your whole entire risk in the trade. So you cut the risk off quickly and move on to the next. Wash, rinse, and repeat. That is the system. It works. You've seen the data, and I've got 2 years of it to be able to stand here with great authority and enthusiasm and say to you that these rules really do work. Now, once you're in, as well, you want to set a profit stop, which is to buy the spread back for 10% of what you sold it for using a good till cancel order. So for us, that would be to put a GTC order in to buy this spread back for 5 cents. Let me show you how to do that. I don't do this very often here on the show because there's not much time. But what I'm going to do here is take the order, create the opposite, and then I'm going to set this at a 5 cents. And what this will do is buy back the 475 put that I just sold and sell the 470 put that I just bought for 5 cents, closing the spread down for 5 cents when I sold it for 51 cents, netting me 46 cents or $46. And that would be a 10% profit roughly. And I'm going to set this as a GTC, confirm and send, and send. All right, that trade is on autopilot. All I got to do is keep an eye on the chart. This is really all I do once I'm in, is once you're in, all you have to do is let the profit stop happen when it happens. And if the stock starts getting close to 475, just be ready on that day to close the spread down right at market close. If the stock is below 475, let's say 10 minutes before the market close it down, take it off, and then go get another one. So Ryan, that is the most I've shared about snipers. It's comprehensive. All that I've just shared is all you need to do to bring this kind of high probability short-term profits into your lives. Ryan, I need to take a sip here, man.
I love it, man. I love it getting down deep like that. And that's just scratching the surface of what's in that guide, right?
Yeah, absolutely. Yeah, there's a lot that we do, and the reason I do this, Ryan, is I've been trading full time for 25 years now, over a quarter century. Makes sense. I'm 62 tomorrow, so I've had plenty of time to play trading. But I have just noticed how people trade, and they're not trading with some of the really fundamental trading psychological distinctions, rules, tools, managing risk, like really managing risk. And so I have a community of traders, and we meet. I have 3 or 4 different groups, but we meet twice a week. We live trade once a week, and then we do community coaching once a week. And our community can interact with each other, share trades. And if you want more about that, just come to mwtradecoach.com and you can learn more. Hey Ryan, but there's more. There's more.
Wait, there's more.
But wait, there's more. You ever heard of what's that company called? Ferrari?
A little bit, yeah.
You might have. Well, Ferrari You know, the last thing I just saw the Ferrari movie. Have you seen that one?
I have not, but I've always wanted the Ford versus Ferrari.
Oh man, that was a great movie. It had Christian Bale in it, and what's his name? Can't remember his name. Yeah, great movie.
Yeah.
Then there's the other one that came out called Ferrari. And it was the life of Ferrari,
Oh,
the
cool.
man, and really, really good. All right, well, you know the bifecta is in place with Ferrari. So Ferrari announced earnings. The luxury sports vehicle company beat second quarter earnings and revenue estimates and raised future guidance. That's the bifecta. That's what we just did with Facebook, Meta. All right, so here's what the stock did to start the day. It was trading yesterday night at just above 410, and now it is finding support right at 430. All right, can you see that 430 support? It was support there, resistance, support there. It doesn't seem to want to go below 430. So that's information we need. Now, is it likely that Ferrari is going to drop down to 400? No, probably not. It hasn't. Even without the news, it just hasn't been below 400 since way back here in February. 1, 2, 3, 4, 5 months. The stock just hasn't been below 400, and they just beat their earnings expectations and raised future guidance. Why on earth would Ferrari drop back down to 400? It could. Some bad news happens. It could, but it's just very unlikely. So I would love to sell down here. And this, again, the distinction is this line in the sand at 400 is a good place in which to make money anywhere above 400. We can find enough credit there. And I'm going to look. The stock rises, we make money. The stock goes sideways, we make money. It drops to 420, we make money. It drops to 410, we make money. It drops to 400, we make money. Up, down, and sideways, we make money on Ferrari. Right there, just that, without the news beating on earnings, raising future guidance, just that, without the guidance, is strong. With the guidance, even stronger. Probability, probability, probability. Sniping, short term, grab the money and run. That's this strategy. Now, I don't know that we're going to get enough credit down here at 400, but I can certainly look, right? So here's what I'll do. And again, let me just remind you all what I'm going to do here. I'm going to sell a credit spread that makes money anywhere above 400. I generally go 2 weeks out, and let's just see what's there. So in this simulated environment, I'm going to type in the symbol, race. Oops, I missed an E there, race. All right, so I've got only August 16 strikes anyway. That's a 15-day trade. That's roughly 2 weeks. So let me go and look and see what's available at 400. Okay, now look, the strikes are 10 points apart. If I sell at 400, by the next underlying is 10 points lower. That's just the way the strikes are priced for Ferrari. There's only $10 there. There is $10 there. So I need $1 of entry credit. There's only 50 cents there. I need $1. That's my rule. So I'm not going to get $1 on this one most likely. So then I need to move my line in the sand closer to the heat, lifting it up, reducing probability of profit, but still maintaining high probability of profit. So I'll go to 410 next. Let's see if there's anything at 410. So then I go back to my nifty swing chart here, and I see 90 cents. That's the one I want. That's the one I want. I want $1 though. They're going to give it to me or they're not. They're going to give it to me or they're not. I'm going to come back to this and put it in the spreadsheet in just a sec. Its price, mid price is 90 cents. I'm going to say my price is $1. Give it to me or don't. Let the trade come to you. Let the trade come to you. Don't go chasing. This is my price. I'm going to go ahead and throw it in there, confirm and send. Go back to monitor. under activities and positions, under working orders, you can see right there, I'm asking for $1, current price. Just gave it to me. That's wild. That's the thing about the first 15 to 30 minutes of the day. You get some pretty wild fills. We got it. We got $1.23, and this is the 410 400. Let me break this down for you. August 16, 410 race. August 16, we sold the 410 put, and we bought the 400 put. Yeah, I did the right thing. We bought the 400 put, 400, and we got $1.23. Get $1 though. I'm going to put the minimum price in there. Go for $1, and then the exit rules are the same. If the stock closes less than 410, which is our line in the sand. Let me show you the line in the sand. I want to make sure this is really clear for all of you. We got this trade. If the stock closes below 410, then you close it off for a managed loss, keeping the max risk out of the trade, keeping you from realizing max risk. So that's the stop loss, the most important one. And then if you, once you're in, put an order in to buy the spread back for 10% of your credit received. And for me, that would be 12 cents. If you get $1, it would be 10 cents. Multiply your entry credit times 0.1, and then set your GTC. That'll give you your GTC buyback price, and set GTC to have that happen automatically without you even lifting a finger. All right, Ryan, I told you we had 2 trades, and they're both really, they fit the rules perfectly. And I think high probability of profit in the next, we might even get out of these trades by the weekend. Who knows, depending on what the stock does. But we're in really good shape on those 2, Ryan.
Love that. Nice work. That's a lot of fun.
Buddy.
That's a lot of fun. Got a couple people in chat. Ted and James both filled at 50, and looks like James filled in or at $1, and then Ted filled in for 110.
Awesome.
So, got some people taking part.
Yeah, man. I know all those people. They're part of my community, and they're really good traders. And most of our community is snipes. We have other things we do, but sniping is fun. You know what I do in the morning is I'll get up, meditate or something, play with my dog, and then I get some coffee, and then I go to CNBC and I find the stocks that are moving big after earnings, and this is what I do to start my day. You do a couple of these a day and go do something else. It's a really, really great system, and I offer this to. I trade a lot of different ways, but when I'm dealing with people that want to get started, I think this is a really fun way to take trading into your life and have really solid rules. So if you follow them, just as I'm doing every Thursday for free here on the Hub channel, it should make a difference in your lives. So that's why we do it, Ryan.
Yeah, for sure. Absolutely.
All right. Are there any, we got time for looking at a couple of stocks if anybody has any, Ryan.
Let's see here. Had some earlier from George, Moderna, and ARM.
I know, George. George, I was typing in Moderna before I heard it. I knew you. I know this one. Oh my God, this is a spectacular one. And I know what happened with Moderna, but you want to check the news, and mRNA is the symbol. And what you can see here is Moderna beat on estimates, but they lowered their future guidance, stating, I'm trying to find it in here. I read it somewhere else, but yeah, they did beat on estimates. Okay, so they beat on earnings, but lowered their future guidance. And what that's doing to the stock, I read slash future guidance on, I think it was CNBC. Let me check here. I read the word slash. And, sorry, I need to search for Moderna. Let me do that again. I read a report that Moderna stock falls on more. Here's where I read it, right on the CNBC page. Moderna stock falls more than 15% as it slashes guidance on low European sales, tough US vaccine market. So the word slash is what I'm attracted to, and it has me consider Moderna because they really cut their future guidance really big, right? But they also beat on their earnings. So it's not likely that Moderna is going to get a lot of attention if it's already signaled to investors that don't expect what we did this quarter. We ain't gonna do it. The next year, this next several quarters, it's not happening. And so what you can see here, the stock was at 120 and then tanked below the 200-day average. And let's see, this pattern here is called looks like Thor's hammer, right? So the stock came as far down as what's just above 80, and then it's recovering, forming a pattern, a candlestick pattern that looks a lot like a hammer. You see that? So that is bullishness. Because the news is mixed, if they had missed on earnings instead of beat, and they missed and slashed, it's more likely that Moderna would be dropping. So it is rising. And from here, the question becomes, how high might it rise? Now, because the 200-day average is in the way, that is a very, very good thing. So that blue line, the 200-day average, should hold the stock. If it doesn't, then 110 should. Let me put my line up here. Then 110 should. All right, that should. But I'd say 120 would be the safest bet, especially given the hammer pattern. So I would consider selling at 120, George, and maybe drop it to 115. Notice the support levels here at 115. I wouldn't go any lower than 115 on this one, George. And there's probably some decent credit there, especially given that we're within the first half hour of the markets and the stock is making a run. So I like that one, George. Good job, buddy. Let's do one more, Ryan, if we have one.
Let's see. Thought I saw Carvana in there, but I don't see it anymore. ARM.
Oh, ARM, yeah. I saw that one this
George
morning
as well.
when I was looking around. It was tough. I wouldn't say it's tough, but there were so many to choose from this morning, so I wanted to spend a bit more time and talk about some of these. So ARM is in the AI chip sector, as you know, and ARM is down for the day. Let's check what happened on ARM. Go to your news. You can get news in many places. Your broker site will have news. You can check there too, and we can take a look. You know where else you can do this? I'll give you another place to find the biggest stocks. If you go into CNBC and you search for stocks making the biggest moves, and let's see, I don't see it here for today. I did have it earlier. Today is Wednesday. Yeah, it's not showing here. Anyway, so let's search for some news on ARM for today on the CNBC site. It's another place you can get news, and you can come down here and see what's happened with ARM. Okay, I'm going to go back to it's. I can dig in, but I just want to move faster here. But they softer guidance over. So this is similar. This is similar to Moderna. They offered softer guidance, and they also had better than expected results. Okay, so there's a piece of good news and a piece of bad news. So it's not the bifecta. We want bad news on top of bad news, or good news on top of good news. And we have a mix similar to Moderna. And for those reasons, on both of those, they're not the very best opportunities that you can go after, like we did with the last two we just did. So you could play it. It is finding support at 130. I say 150 is as close as I would go on ARM. The two I gave you already on Meta and Race, Ferrari are the two that where both sets of news are in the same direction. So yeah, and as I said before, this is earnings season, and we have big names announcing tonight. So tomorrow morning, good time to grab the guidebook and snipe along. And if you want to learn more about what my community does, you can go to mwtradecoach.com and learn more. Ryan, Thank you, buddy.
Of
Always a
course. Yeah.
pleasure.
It was a lot of fun as usual.
Uh-huh. We got to get you sniping, man. Come
I'm
on.
ready. Let's do it.
All right, brother. All right, everybody. Thanks for showing up for today. I have an awesome day today, and we will see you next week. Same bad time, same bad channel. Bye, y'all.